we kwamen nog net de Eastern Caribbean Central Bank Governor Timothy Antoine tegen. Mr. Antoine, thank you for talking to Dime on a business channel.
Thank you for having me.
So yes, Eastern Caribbean Central Bank. How, if you can tell us about, we're going to first talk about the meeting. What was the importance for this meeting this morning? From the standpoint of the Eastern Caribbean Central Bank.
So, well, I want to speak about it from the context of not just the Eastern Caribbean Central Bank, but the Caribbean. This meeting we had this morning was a breakfast meeting with the Managing Director of the IMF. It's a tradition we started about 15 years ago, and it's a very important opportunity for small states in the Caribbean to have face time, direct time with the head of the IMF. And so we take these meetings very seriously because they provide us with an opportunity to share our Caribbean perspectives, to better explain our realities, and to engage the fund on areas for support in the Caribbean. Several areas were discussed this morning. One is obviously the issue of climate change and its effect on our region, and how the fund can support with respect to its credit facilities as well as disaster risk financing strategies to ensure that we build resilience in the Caribbean. That was a focus of our discussion. And of course, coming on the heels of the experience of the Bahamas with Hurricane Dorian, but also the experience in Haiti, the experience in Dominica in 2017, among other countries. We also discussed, again, the issue of correspondent banking relations. The fact of the matter is the Caribbean cannot trade with the rest of the world if there are no correspondent banking relations. The situation has stabilized compared to where we were 3 years ago, but it remains fragile. And the discussion this morning about what other opportunities might present themselves for us to strengthen our ability to secure and maintain correspondent bank relations. One idea is the use of technology, unique digital identifiers that can be used by any bank, respondent or correspondent, to be able to track activity in real time in the payment system. And the point about that is, if we use technology well, it can mitigate the fact that we're small, because it doesn't really matter whether you're small or large. It can work for anyone, any part of the world. And we believe that the use of technology for corresponding bank relations, for example, would be far more effective than what we have now, fighting money laundering and terrorist finance, than what we have now, which is a blunt instrument that cuts off countries and small banks in regions such as the Caribbean and does not address the fundamental issue of money laundering. Because what we see is that when you de-risk or you cut out these banks, you actually increase the risk of money laundering because people have to find alternative ways to move money around. Send money for your child in the US who's studying, pay for goods and services abroad. What means is that people have to use cash and find ways to move cash around, which is not safe and which in fact can encourage money laundering. Yeah. So that's a simple example of what I mean. But we also discussed the whole area of fintech, financial technology, and how we can help to really expedite development in our region. We talked about its potential for building resilience, financial inclusion, growth, competitiveness. A number of our countries, Bahamas, the Eastern Caribbean, have started work on digital currencies. And we talked about what that means for the region in terms of improving the payment system within the region. But we also call on the fund to work with us on cross-border payments globally. The idea of Libra has come about because of a deficiency in the global payment system. And while there are concerns about Libra, our position is we need to find something that works, that is better than what we have now. And I think the fund, the IMF, has a very important role to play working with central banks and countries to design a more efficient cross-border payment system. those are just some of the ideas that we discussed this morning.
Okay, what role does the Eastern Caribbean Central Bank take in climate resilience? We know that there are two big pillars, financial protection and structural protection, and there has to be a balance, it's a tightrope to be walked when looking at how much to reserve if we're talking about financial protection and the long-term structural protection. What is the view of the Eastern Caribbean Central Bank?
So we see climate change as an existential threat, and therefore to build resilience we must address climate change on a number of areas. One, fiscal resilience. So the Eastern Caribbean Central Bank advocates for fiscal responsibility, or what I prefer to call fiscal resilience frameworks, such as we have in Grenada, Jamaica, soon to have in Barbados and the Bahamas. What that does, it provides the governments with a framework to build buffers in times that are relatively good to cushion the effect in times that are bad. In the absence of such a framework, what happens is that when there's a recession, the population feels it even more because the government is not in a position to spend to cushion the effect. So what we advocate with fiscal resilience is to create a framework which smooths out government spending between the ups and downs of the economic cycle. And like I said, several countries, Grenada, Jamaica, already have it. And we advocate for that. So that's one specific example on fiscal resilience.
But if we're looking at spending, then we're looking at support for agriculture, investment in education and healthcare,
yes.
Crime,
yes.
Infrastructure that are needed also for
yes.
climate resilience. So
yes.
The smoothing of the spending,
yes.
When there is more money available,
yes.
Is it not that then you then want to go and do also the necessary things in infrastructure improvement?
We absolutely must, and that is why we have been advocating very strongly for adaptation funds to invest in resilient infrastructure, to be able to invest in our ports, our utilities, our infrastructure, many of which are on the coast and are particularly exposed in the region. So we have made a call for a shift in the criteria to move away from GDP per capita to vulnerability in terms of a focus. That is important to allow us to access concessional resources and grants to be able to do infrastructure, resilient infrastructure. Without that, countries are forced to borrow at very expensive rates and terms to do that in a situation where our debt is already very high. So to create investment opportunity, you have to create fiscal space, fiscal resilience, but you also need investments for adaptation, for resilient infrastructure from the World Bank and other international agencies. In addition, you need them to speed up the release of funds. Many of our countries are very unhappy with the rate of disbursement of funds. The Green Climate Fund, for example. We hear there's money there for adaptation, but the funds are not flowing. And the hurricanes keep coming. And if you get hit by a hurricane, as Dominica did in a storm in 2013, and again in 2015, and then again in 2017, trauma on top trauma. Before you recovered from one, you get hit by another. You get even more devastation. So there's urgency there for us. So there is a need to change the vulnerability, the framework. The IMF and the World Bank have started some work in that area through what they call the debt sustainability analysis framework. So they're beginning to move the framework away from just GDP per capita to vulnerability. They started, but they have some way to go to really get it where we need to get it, right? Because the problem with the current GDP per capita income or per capita GDP is that countries like the Bahamas or Antigua and Barbuda or St. Kitts are considered high income, maybe even Suriname, to some extent, maybe middle income, and therefore you graduated from concessional resources. The other area of building resilience is financial sector resilience, is insurance. Because we have limitations, as we speak, 2/3 of the losses in the Caribbean are uninsured. 2/3 uninsured. So we need to be able to adopt risk transfer mechanisms like the Caribbean Catastrophe Risk Insurance Facility to be able to help our countries get more coverage. So for example, in the recent situation in the Bahamas, Bahamas was able to get a payment of around $14 million to assist with their recovery because Bahamas is a member of CRIF. Haiti was able to get a payment a few years ago when they were hit by, I think, Hurricane Matthew. Dominica got $20 million when they were hit by Hurricane Maria. So we need to improve insurance coverage in the region. All right? And then there are other areas as well. Now, the ECCB, just last point on that. ECCB, as the regulator, we do two things. We work with our licensees, commercial banks, to ensure that in their risk management framework, they are catering for climate change. If you have a storm and it takes out some of the housing, that affects the non-performing loans in the commercial banks. Yeah. That can create banking instability or financial instability. So we ask our banks to focus on risk management to deal with the real effects of climate change on the portfolio of our banks. The other thing that the ECCB is doing, and this is our own contribution, small as it is that we've set a target to become carbon neutral by 2022. The campus of ECCB, which is in St. Kitts, to be carbon neutral by 2022. So at the moment, we are investing in renewable energy. We set up solar canopies over our car parks. That will generate about 60% of our energy needs. And then we're doing some other things internally. By 2022, we want to have net zero carbon emissions.
Okay. Also, as one of the last points, if we're looking at the voice of the Caribbean, we are just different countries. We do not speak as one voice yet. The Eastern Caribbean Central Bank is let's say, on the forefront of Caribbean inclusion and is this framework that you have, can it be used by the wider Caribbean?
We think that there are lessons from the Eastern Caribbean Central Bank that can be shared with the rest of the Caribbean. This year, it's 36 years since the Eastern Central Bank was established. And I will tell you, when the European Central Bank was being established, it sent a delegation to the Eastern Caribbean Central Bank to learn from us. So I think we do have lessons to offer, how small countries can come together. The fact of the matter is that because of what we have done in the Eastern Caribbean for the last 42, 43 years now, we've had a stable exchange rate. One EC dollar, one US dollar is 2.7 EC dollars. One US dollar is 2.7 for the last 43 years. We've been able to maintain high reserves and to keep our currency stable. What does that mean? It means low inflation. It means free convertibility. If you need US dollars, you can get US dollars for trade, for travel. It means confidence from the private sector. It means that people's income, they have reliability in terms of their disposable income. That's a model that has worked very well. And remember, it came out of a difficult situation. After independence in the 1960s and 70s, remember how we started? We started as one. British Caribbean Currency Board in 1950, based in Trinidad. Trinidad got independence in 1962. Guyana got independence in 62. Barbados 1966. And then Barbados decided to go on its own. So we moved from Barbados to Trinidad, from Trinidad to Barbados. We set up the Eastern Caribbean Currency Authority with Barbados and the Eastern Caribbean. When Barbados got independence, Barbados decided to go on its own. So now we had to find a home for ourselves, and that's how we moved from Barbados to St. Kitts. There was a lot of people at the time who didn't believe we could make it. How could these small states survive on their own? Small independent states. And we decided our best effort is to come together and join together and build something for ourselves. And we're very proud of the fact that we've been able to craft these arrangements and that they have worked for us. And we believe our region needs to come together more. At the end of the day, at a time when all over the world people are talking about the big countries are looking after themselves and talking about their countries first, what are we doing for ourselves? What are we doing for ourselves? We need to come together. So whether that is on digital currency, whether that is on trade, whether that is on climate change, we need to come together and we need to speak as one voice to the international community. We're small, we're on the periphery, they see us as, So the best way for us to have impact in the international arena is for us to come together with one voice and then to use our block of votes in the IMF,
Yes.
in the World Bank, in the United Nations to be able to help make a difference. And when we bring our voices together, we actually get things done. So that is the lesson of the ECCB. Small countries can come together, and when they do that, they are much stronger than anything they do on their own. And that's the lesson that we offer to the rest of the region.
Thank you very much.
It's been my pleasure. Best wishes to the people of Suriname.
Nou, hiermee sluiten we af met gouverneur van Eastern Caribbean Central Bank, Timothy Antoine. Dank u wel.